What's up, guys? My name is Andre, and in this video we're going to be covering the ORB by performance report on edgeful.com. So first of all, what is an opening range breakout? What is the ORB? It is the high and the low of the first 15 minutes of the session. Now, for this video, we're going to be covering YM in the last 6 months in the New York session, which means that our ORB time frame is from 9:30 to 9:45 Eastern. So it is very important that you understand what these sessions are, because in this case, for this report and all other reports, we are filtering out all of the data in between the sessions. And these blue boxes here outline the sessions. This is a TradingView indicator that we have. It's called Edgeful Market Sessions, and you can get access to them by clicking off to the right side. You can see this is where you get access to our TradingView indicators, and then here you're going to put in your TradingView username. And you can find that username by clicking your profile button, and then you'll see your username right here. Mine is Edgeful, yours will be something else. And then once you do that, you're going to see in your invite only section all of the indicators that we have. So the ORB by performance report. It's very important that I first mention that this only checks the first breakout of the ORB. This is not going to check every breakout out of the ORB. It's only going to check the first break. There's a few customizations that you can look at here. The one that I'm going to start with is the by wick. So you can see we have a breakout criteria customization, and we have a break back in criteria customization. And this is pretty much saying, how do you want the start and the end of the calculations to work? So if you have both of them by wick, price does not have to close outside of the ORB for it to start the break, so that you don't care about what. So in this case, this candle here starts the break. Now the break back in, if you have it by wick, this candle invalidates it ends the calculation. So this is a very small move to look at. So let's actually go to this day. This is YM February 20th, 2025. We're going to go to February 20th, 2025. So now we have the by wick to the wick customization here, and we're looking at this one day. This is minus 0.09%, which is not, now keep in mind, obviously that is not considering this entire move down. It is considering, and I'm going to show you exactly how to check this right now, and that's it's always from the ORB low and the ORB high and the continuation down. It is not from the close of the candle. But here you can see if I click on the ORB low and then I go to right over here, this was the candle that broke. This was the low that was made, and then it broke back in on this candle too. So if you are very sensitive to the wicks, this is the number that you're going to want to look at. Now, obviously, every day is going to be different. Some days are going to be way higher, some are going to be way lower. But I just wanted to show you exactly how this works, because this is from the ORB low down to the low made before this candle breaks back in. So now I'm going to use the same day, and I'm going to change the criteria here, this customization, to be by close. So you can see the full description right there, but let's change this to be by candle close, save. And now we're looking at the same day here, that February 20th, a much different result, almost a 1% move. And the reason for that is because after price broke out, it never broke back into the ORB. So here you can see price moves down all the way to here, 0.97%. And this is exactly what's being measured here. So what you would need to invalidate this trade or to stop the calculation is for price to close back inside of this ORB. So let's look at a couple examples here. Let's try to find a clean example. Let's use this one. So in this case, this is February 14th. You can see here that using the close criteria, the move up was 0.06%, and that's from the ORB high. So I go from here, 0.06%. That is your number right here because this wicked out and this candle closed back in. So now this candle invalidated or ended the calculation. Now we want to see how far did price continue higher. So now that I covered exactly what this report is measuring, and again, as a reminder, it's only the first break, so that this is completely ignored here. This move is completely ignored. Let's look at some other examples. This move is completely ignored. This move is completely ignored. It is only from the first break. Now, let's go to the 6-month results and just give it a second. Okay, perfect. So what you can see is that the average, now this over here is the average move, and then this is the max. So the average move is roughly 0.3% from the top and 0.3% from the bottom on a breakout and breakdown day. So let's look at that other example that we were just looking at right here. On average, the extension downwards is going to be right around here. And by the way, on this indicator, if you double click it or you just go to the settings over here, you're going to have these extension lines. So you can turn this on and then you can make this 0.3 to the downside and then 0.3 to the upside. And then now you have right here a 0.3 extension to the top side automatically plotted for you. And then from the ORB low to the 0.3 to the downside, automatically plotted for you every day. So you don't actually have to worry about plotting this out or figuring out where this is. You can just go to this report, see 0.28, 0.26, and then now you can go in and actually, if you want to be a little more specific, you can do 0.28 and then 0.26. And then now you're going to see exactly where your levels are. And it's always important to note from the high and from the low. It is not checking from the first candle outside the close of the candle. It is always checking from the orb. So that's a really important note. Now, obviously, the most important way or the most valuable way to use this is to set realistic profit targets. Some of these days are going to obviously be closer in. Some of them, like this day here, will be much further out. In trading, you want to bat for singles and doubles. You want to go for consistency. You don't want to go for home runs. Not every day, at least. And in this case, what you're looking at is the average move down. So this is the realistic expectation for what the move down is. And that is how you can use this report. This is the maximum. Just keep in mind that you should definitely always be aware of what type of customization you have on. You can see that this is going to change the report pretty drastically. Now, if you want to change this to a different candle time frame, closing back into the range, you can do that right here. So you can do a 15-minute time frame, and right here, if I go back to the candle close. So this would require a 15-minute candle to close outside and then a 15-minute candle to close back inside, which you can see right over here. And then I'm going to click save, and then you can see here the different percentages. So now this is even higher than the 5-minute, and then you can see 0.34, 0.37. So play around with it. This is really, there's no right way to use this. This is just for, I mean, you could customize it to whatever you want. And if you have any questions about this, please reach out to our support down here, and you can message us. We'll answer you as soon as possible. If this was helpful, please subscribe to our YouTube channel. We have a bunch of great, valuable information there. Thank you for watching. I appreciate it.